Good morning. YouTube studio. Wah, wah, wah. Content. Live on. And we're going to change this to live chat. Going to close that down. Let's see how this shows up. Yeah, this shows up fine. Okay. Wah, wah. Morning, Chris. We got Microsoft up there. I got to get my scans going. Oh. Let's see if I get a Joe Biden ad. Wah, 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 wah. No, I didn't get an ad. I guess it hasn't turned on monetization yet. Answers by ChatGPT. Is that a bot? Huh? No, I'm talking into the microphone. Sorry, should I close the door? No, not at all. Hold on, I can close the door. Then you won't be able to hear me. Hold on. I got you covered. Is Answers by ChatGPT a bot? That's my question now. That's what I'd like to know. And I don't know if there's going to be a split or not. I mean, it would be interesting. Not monetarily applicable. Splits don't mean anything these days. I'm assuming it's a bot. But I don't know. Yeah, that's interesting. Answers by ChatGPT. I don't know if I click on them. Let me see. Go to channel. Answered any question in 20 seconds or less. 15-second answers is the name of the channel. 11 subscribers, 4 videos. I think it's a bot. It's got to be a bot. I think splits, I think the market, here's a prediction, Chris. If you and I are alive in 20 years and we're still doing it, this generation of traders still thinks, and you and I still think splits are monetarily, I mean, there's still some type of market indication that splits are good. With 0-day, we're down to 1 day funding. So what is it? Trading fulfillment. I forget. I'm out of it this morning. I am out of it this morning. I think splits do long-term tend to boost the stock up because I think there is some type of psychological force to buying a stock at $950 versus buying a stock at even though you're buying $50 worth. I think there's still a force there, but core investments we already did. I need to set up these scans in the morning to email me. Energy names. I can't believe there's nothing in energy. DRV, SDOW, NVD. The down? I can't believe that. Yeah, if you don't deal in fractional shares, I deal more with dollars than shares. And I've just gotten like mentally ready to look at shares over dollars. Shopify's up big. Finally. I mean, I think it's starting to make that turn. At 58.95, you're up in this area with confirmation. So where it's trading right now. Leverage ETFs, though, that's an interesting one. Low cost Vanguard. Let's see if anything crossed up here. Answers by ChatGPT 1 to 10 for 1. That's got to be a bot. It's got to be a bot. Oh, look at this. Powell. It's definitely a bot. They haven't answered whether they're a bot or not. It's definitely a bot. Absolutely a bot. I should probably just ignore. Hit ignore. But I don't know. Am I frozen? No, Chris still sees me, so. There we go. I don't know. Nobody's joining the damn thing. It says I've got one viewer in here. Duolingo. We got the watch list going. We've got not owned. Let's see. Chewy. I thought Chewy would get a cross up. Morning, Muhammad. Muhammad, you're like the Middle Eastern name thing is like the American David. Muhammad. Morning, Mark. Okay, my not owned list is there. Let's look at the Dow. I don't think anything on the Dow. I mean, the Dow is Nike. Nike's floundering around that $90 level. I mean, you know, it's putting in that floor. Let's see, NASDAQ. It should have some. We were in an upward trend. CPRT, Copart. Oh, that's kind of interesting. Let's look at S&P. Morgan Stanley, Nike. Okay, I'm gonna re-log in and do log out. We're gonna re-log in. And we're gonna look at the market scanner again. Okay, let me look at the NASDAQ just to make sure. Yeah, Copart's the only one. I'm going to look at the energy names because I can't believe there's no energy. But yeah, there's no energy. Huh. Interesting. Okay. Yeah, it still says I only have one person in here. But I know there's more than one person in here. I know that viewership is down, but I don't know if that's because I took vacation or not. I don't know how to read the damn charts. I don't follow a lot of my own stuff. Yes, and in fact, one of the social questions: any reaction to Jim Cramer's take on GCT? If you have not seen it. And want to go watch it before I comment on it. Morning, Tyler. there is the link to the CNBC Jim Cramer take on GCT. It's an interesting one. I don't know that I necessarily think, oh my God, we've got to get out of it. I do find it. Oh, this is. Let's do this. Copy. Okay, we're gonna do that. Morning, Larry. Morning, Daniel. That's an interesting one. I like looking at the heat map to see, and I usually do it, but look at what really catches my eye are utilities, bright green, Tesla, bright green, banks, hugely green, and then the Eli Lilly, and that was just because of the Chinese approval. But you've got some specks of really bright green in the tech, but not the big tech. And I would argue PanW at 311. I mean, if you bought that at 295, 291 when it was first down there in the morning, you're golden. I mean, you're golden. You're absolutely golden. So, that's an interesting look. If we let's go to 1 year. I mean, is it a bull market? I mean, 6 months, bull market or bear market? Who do you want to listen to? 3 months? You go to 1 week. It's kind of the same thing as the 1 year. Then you get down here, and it looks like we're a little bit oversold in the short term. And if okay, here's a tip. Well, I'll kind of say, yeah, I guess I shouldn't. Is it going to reset at 9? I think it resets at 9, or maybe it's. There we go. I've done this in the past where you go 1 year, 6 months. We're still in a bull market. 3 months, still in a bull market, not as strong. 1 month, super, super strong bull market. I mean, just bright green. Then you go 1 week, it's a little bit less. And then you go 1 day, and it's a little bit less. And then you go and look at the chart, and we're up here, but 455. We're starting. It's kind of 0.01. We're not 455.80, and we're at 455.76. So I've used those colors before to try and take a look at are we in a bull market? Are we what's the trend look like from short term to long term? I'd like to see a study as to how many gray-haired gentlemen on CNBC have their hair parted on the left versus the right, because there seems to be just a CNBC hairstyle for analysts and geeks like me. Okay, let's see. PanW was. Let's go to. I did want to look at. Find an entry on here. 297 was an entry in pre-market for the nice A+ setup on the 5-minute. If we go FF and over 2 days, PanW. Let's see, over 2 days of FFIE. This one got you in. It actually loses you 7%. So the back testing, we probably want to back test a little bit longer. 5 days, make 40%. I mean, you really got to be, and I told people when I shared this one, the exit was the problem for me. When you went back long term, the exit was the problem for me. It wasn't the entrance. The entrance, I think, are still great because you can see you still get some nice pumps on those entrances, but you don't seem to get good exits. So, okay. I might start up here. Let me open up. Do some of these links. It's all NVIDIA today, by the way. I mean, there's very few of something other than NVIDIA. There's that. No, I don't want CNBC. Oh, what is going on? There we go. Okay. We're gonna leave that open. Oh, come on. Seeking Alpha screws. It's kind of pausing now. There we go. Google and Microsoft. We have Microsoft, then we have Google, and then we have Lululemon, and we have Target's results. I will go over why the good news about pulling it out of the core portfolio, including Costco and Walmart. PDD killed it on earnings. Killed it. Let's see. BZFD. I mean, this one. Let's see. CFD. Oh, I want to do Barnes and Nobles. BNED. That's an interesting one. Okay. We had to do those. NVIDIA. NVIDIA, and then the S&P heat map. Okay. Oh, I should log in. I don't know why I'm not logged in. We're going to do the heat map. Why don't I have the dark? Settings. Wide layout, chart colors. Oh. Screener, such, blah, blah, blah. I guess I got to do it in the white. Okay. We're going to go to the Qs. And 4 hour. Okay, I got everything, and I want to bring this over to the beginning. Hoo-ah. Oh, let me see. Ah, you're right. Thank you. Option. There we go. Oh, let's bring it over a little bit more. There we go. Thank you, Varun. Hey, Marty. I think, let me just figure out the screen real quick. I'm looking at it on my YouTube. It's a little bit behind. You guys are delayed from what I can see live. But I don't trust. My, yeah, there we go. Okay, we're good. Now we is good. Cause yes, you don't see my tabs and stuff. So Marty, Peloton, I will first start this off with Peloton is a trade, not a buy and hold. Algorithm, 4-hour algorithm got you out with a nice 5% gain. I mean, you could have had huge gains, but it got you out with a 5% gain. MACD's kind of in that death spot. It is quickly oversold. Morning, Steph, but 36 on the RSI, going down to 34 in the afternoon. 200-day moving negative, 50-day starting to move positive, but no confirmation. So I you take a look at a weekly. Holy crap. Hold on one second. Get out of there. Sorry. I have a pine tree, like a tall pine tree. Not really it's like a tall, thin pine in my front yard, right next to my window. And there was a hawk, probably 6 feet in width. And he just came up, and I think I have a bird's nest in there, so I think he was looking to grab some of the eggs. Okay, so Peloton. This is a weekly, and you've just got upper left to lower right. That is not a chart that you want to invest in. So you take a look at that one, you say, yeah, it's just, do I bet on this one coming back? And you're coming from $150 down to $3. And its absolute low looks like here was $2.70, April 29th. Your MACD just kind of straight across. Then you go over to Seeking Alpha, and we'll look at Peloton. And I will tell you, the valuation on this one is absolutely crazy, even at these levels. The valuation gives it a B, but they're not making money. They're just not making money. I mean, that's the problem with this stock. And I just, I mean, price is $300 million convertible senior notes, offering to rework debt. I don't see this one being a buy unless you believe somebody's going to buy them. And the question is, would Apple buy them? Well, what does Apple really get? Apple gets a ton of debt. Apple gets, the hardware, which they could probably develop themselves, because it's, the bike isn't amazing hardware. It's a quality hardware, but they have so many problems with the existing inventory and getting rid of existing inventory. They shouldn't be making more. This should be an absolute 100% digital thing that has GLP, and it should be HIMS. HIMS or something like that should Sherry, good to have you. But HIMS should partner with Peloton, and that would probably get this one out of its doldrums. I'm a big Peloton fan, and let me caveat this. I'm a Peloton fan. The bikes are tremendous. The monthly price is absolutely ridiculous, but they have the best instructors that are out there. I mean, their yoga, their treadmill, their spin classes, best instructors, and that's what they're hanging their heads on. But I'm not willing to pay $40 a month for a freaking, for an instructor. I'm just not. I mean, I'd rather pay $20, $25 a month for a gym membership and get a live in-person instructor with other people in a class. We're out of the pandemic. That's where you're really seeing this kind of falter. So, Marty, I'd say stay out of it. If you want to trade it, and we can go and look at this, I've got that A+ setup that I put in the newsletter yesterday as a free trend spider. Opportunity to try and look at 5-minute charts in extended hours. Now, I think the entry, and I said this yesterday, the entry for this one is significantly better than the exit. And I haven't been able to figure out a solid exit that kind of goes across the board as oh my God, it's fantastic. This in particular, that $3.28, it's an A+ setup. I mean, you've got low MACD crossing up, you've got the RSI coming off of oversold territory, and you've got the candles moving in the right direction with confirmation. Now, it got you out with a 0.91, hasn't gotten you back in. So, Marty, I would probably trade that one on a very, very short time frame. That would be it. And Steph, my girlfriend this morning, asked me about Shopify because they got an upgrade. And they have, it has double bottomed. I mean, if you look at this 4 hours, so the algorithm got you in at 58. It didn't have confirmation, went all the way down to 57. So I think I said this with don't underestimate that this one might not go lower. The problem with Shopify is the force in this market is momentum. And Shopify, even with these low RSIs. Now, if your time frame is 1 year with Shopify, I think you're fine. I absolutely think you're fine. Because if we go to a longer term chart, your weekly shows that the resistance up here is at 80, right at the 200-day. And from a weekly standpoint, you've quickly gotten the RSI down to 35, but you could go below. I mean, look, this one, when it got to 35, it kind of for a couple of weeks, the price still moved down, but the RSI just continually just went straight forward to the right. And you continued to go down. You went from about 80 down to, before your RSI was done, you went down to, looks like 60. Your low was 51. So I don't want to say that we're at a bottom here, but from a 4 hour standpoint, if you're looking for an entry into Shopify, it's up 3% in the pre-market at 58.96. Where does 58.96 take you? It takes you over that 9-day. 9 days still moving negative. I'd still like to see a couple of candles with confirmation, but as you get confirmation, I think this gap right here this earnings gap turns into getting a fill. Why do I think that? Well, if we go over to Shopify, I tend to believe that the analysts are saying, hey, this is kind of a movement. Now, we talked about momentum. When you click on momentum here in the quant, you can see 3 month, it's down 24%. 6 month, you're down 18%. 9 month is the only positive. 1 year, you're down 5%. So, and momentum is a strong factor. Now, when you look at valuation, the PE extremely high. Now, the PEG, which is Steve Kress's favorite, look at this, 1.33. It's down 33% against the norms. When you go to revisions, this is where it's a little bit tricky. Over the last 3 months, it looks like 39 analysts have revised. 39 analysts, 23 are down on earnings per share. Now, 23 are up with revisions on revenue. So that's where it kind of gets tricky over the last 90 days. But overall, I am still holding Shopify. Have I added to it? No. I still think it's an $80 stock. If you need the cash or think the cash will work somewhere else better, I'd say take it. I don't need the cash. I like the company. I want to wait for the pops. When you look at a weekly on this one, it's not upper left, bottom right. It is trending downward, and that's the momentum of the market where you're in danger, Steph. So that's it. So, hey, Chris, Uber, the problem you have with Uber is Tesla. And that's it. I mean, well, I shouldn't say Tesla. It is the Minnesota stuff where they're getting a challenge for minimum hourly rate for Uber drivers and Lyft drivers, and they may pull them out of that. It's EU regulation. I've said it before that 61.48 is probably a support level that I really like, that I will probably start adding to at this point. I think it's an $80 stock. When you go back, take a look at the weekly. Are we upper left to bottom right? No, but we are in a downward trend, and that momentum is strong. Your top Bollinger Band is coming down. So you take a look at that one. Then you go over here to Uber. Now, Lyft has performed far better. You can take a look at that. Wall Street says this is a strong buy, but take them for a grain of salt. The valuation is the problem, and that's where it gets expensive. Now, their PEG is not expensive. These guys are really, really doing well. Now, if we take a look and we select the symbols, we'll get rid of this and we'll put Lyft and we'll put Tesla in there. Those are the three that I would kind of say, hey, these are the three that you really want to look at when it comes to kind of driving, blah, blah, blah. You look at 1 year. Look, 63%, Lyft is up 97%. Lyft is doing better. Tesla in the doldrums. Year to date. Tesla still down 25%. Lyft and Uber kind of even, but Lyft is beating them. You go to 6 months. Tesla still down. Lyft is killing it. You go to 1 month. Lyft and Uber are down. Tesla's up 30% in 1 month. You go to 5 days. Uber and Lyft are down. Tesla's up 6%. So it's clear that Tesla's promise of robo-taxis is weighing on these two names in the short term since that announcement was made. But when you get up to 6 months, Lyft is far outpacing and doing far better. But everything in that last 6 months is just down. So I would assume that Uber is a buy. When you look at valuation, let's look at peers. Because I think they have DD Global, Grab Holdings, Avis, and Hertz. You can kind of look at this. You see DIDIY, Diddy, is a strong buy on everything. Grab is a strong buy on the Wall Street analysts. You can see Lyft is a buy and hold, Hertz is a sell. Then you go down here and you can see the grades on it. Total return. Take a look at this. I mean, you look at the 1 year return of Diddy, and they're 52%. All of these. Net Lyft, 97% over 1 year. Then you look at the dividends. Nobody really has a dividend. The valuation, Uber, PE, 31. Diddy, 48. Lyft, 22. So Lyft is actually cheaper than Uber, even today. You look at the full year for 2 year, yeah. Lyft is cheaper. You look at the forward PE, and Lyft doesn't give the forward guidance, but look at the PE, it's going up. So that's a crazy thing. Now, when we look at the gap forward, right now the only one is Uber, 0.7. And we saw that was below the industry estimates. So look at the growth. I mean, the growth. Uber's at 14%. Lyft is only 10%. Revenue growth forward, 14% versus 16%. So the estimates are there. I would argue that Uber is still a buy. You've just got to wait for that momentum to kind of play out. So that's it. The performance, you can clearly see that just short-term Uber is getting killed. Lyft is getting killed short-term too. So this is Avis. They're killing it short-term. Income statement. You can see how big Uber is compared to Lyft. Didi is kind of on the Uber scale. But yeah, if China's coming back, then Didi's going to be doing well. So Uber is kind of like that. Ooh, and NVIDIA, I'll go over. Yeah, and Shopify, Dell's a buy. Karun, Dell's a buy. I said it yesterday. Karun. Where is it? Let's see. Recent posts. See all. You can look up Dell. Let's see. When did I say? Dell, SMCI, MSTR. Oh, I guess I gotta look it up. Let's see. Dell. When did I last say Dell? March 27th? No, April 4th. April 9th. I guess April 9th was the last time I had Dell in there. But it's a buy. I mean, Karun. Look. If you want to sell, it's at 52-week highs. I mean, if we go over to Dell, here's how I would look at it. And I do own it, but I'm buy and hold. I'm not trading it. I mean, if you want to trim it, that's not a horrible play. Its 52-week high was 154. The valuation, they just announced a deal with Microsoft. Potential gain in AI share yesterday at 8:40 a.m. Dell teams with NVIDIA to offer new Blackwell GPUs and AI push. They made that announcement the other day. I'm not trying to time this one. Do I think we could get back here to 122? Absolutely. Absolutely. I mean, from a weekly perspective, all I'm seeing is strength. So, but take a look at the RSI on the weekly. I mean, the RSI on the weekly, you're at 73. You're coming off of 80 levels, 89 here on earnings, 89. The stock was trading for, it opened at 92, it closed at 124, and the RSI was at 89. RSI is at 89, you get a 124, you're trading at 147 right now. So RSI is not like an absolute metric. You're trading higher. You did go down, you went down, but ultimately you came back and you went higher. That's how I view Dell. I don't view Dell as, I'm going to trade in and out of it. So, and it's 9:06. I probably should start stuff. I may go live on Zoom today. Paid members, I may go live on Zoom for the earnings. I don't know. Maybe I'll do it. Maybe we'll trade a 5-minute chart on there. Taiwan Semi's up 2%. Shopify's up 3%. NVIDIA is up 0.44. I think if you can get NVIDIA anywhere under 950 today, I think if you don't have a position, you buy it long. NVDL, I mean, if you're playing for earnings, this is the one to play. It's a little bit overbought. Algorithm got you in over here at 34.48. Don't you wish you would have gotten it? Don't you wish? I forget that song. I don't know how to sing it, but remove this segment annotation. NVDL is a killer over, Why is that only going 17 months? It's got to be because it just came out. Let's make sure we're on 24 months. Yeah, 24 months. There we go. Okay. Morning, Travis. And that's the trading lifestyle, by the way, Chris. Taking your laptop down to the pool. Okay, I am going to get started here on the podcast. Okay. ELF earnings are today. ELF is an interesting one because Target just announced this morning, Sherry. And ELF is plus 9.4%. Target announced fairly weak earnings per share. And these guys are the TikTok guys. The TikTok ban may weigh on them, ELF. But, I mean, I own Ulta, which has been a complete mistake. ELF, the only thing is wrong with it is valuation. I mean, and it's gotten an F, but their growth is holding them up. Look at the PEG ratio. When you look at the revisions, it's 7 revisions up, 8 revisions up in the last 90 days. When we look at the Wall Street analysts, their average price target 204, and it's 158. That may be a good buy. That may be a really good buy. It's funny. Everybody else covers Celsius, and they're at 95. So they've touched that 100 point a couple of times. But again, same thing with this. The valuation is a little nuts. But revisions B+. Ooh, they've had 3 down. But ELF I like. ELF algorithm has you out. So it doesn't have you in before earnings. But I don't listen, the RSI's at 45 and the MACD's below the oscillator. If you're into ELF, I don't think it's a bad play to buy it before the earnings. You look at the weekly, we're seeing some weakness, but that upward trend, I mean, your bottom would be 67. I can't imagine this goes back to 67. So I can't imagine that goes back to 67. But it's clear that, you need that third point. So who knows? Okay. I am going to start here because I've got, let's see, we've got 20% off there. We've got that. We've got the link tree. And we've got this. Year-to-date performance. Oh, Okay. QQQ, start recording. Yeah, I don't think that's a bad play at all. Anything with the valuation hitting against that 100, I think you're right, Sherry. You'll be able to buy it at a lower price. Okay. Good morning. It is hump day, May 22nd. And listen, there's nothing going on in the market. There's FOMC meeting notes that will tell you how people feel about the rate cuts. But it's NVIDIA day. So the large majority of this podcast is going to be spent talking about NVIDIA, talking about NVIDIA plays, talking about options markets, talking about that. Snowflake and ELF also report today. Snowflake, I say buy it under 200, sell it over 200. I think you'll be fine with that one. ELF is one that has had some hype. It's pulled back recently. Target reported earnings this morning. They weren't great. So ELF is one of their main, that's one of the main sales channels for ELF. Is it good? They beat on revenue, but earnings per share, they didn't. So we'll see how that works. But the big news of the day, again, is just NVIDIA. So let's take a look where we are in the markets. The Qs, we still have confirmation. We're down 0.1%. It's negligible. It's like 20 cents that you're down, 5 cents that you're down on the triple Qs in pre-market. But you've got an extended MACD. You've got an RSI that is at 77. You've got tremendous overbought kind of indicators here and a downward trending volume. What NVIDIA will drive this market, whether they beat, whether they announce, hey, the Blackwell demand is going to be the biggest thing. We'll go over all of that, but it's going to drive this market. So what do you want to do today? I'd say sit tight. If you can get NVIDIA under 950, I think long-term, you're perfectly fine. I don't think we're going down to 700s. I don't think we're going down to 800s. I could be totally wrong. Listen, PanW was trading in the 290s yesterday. It came back to 311. So obviously there are bullish tendencies in the market. You want to know how to see bullish tendencies? Go over here to FinViz. It is 100% free. And this is what I used to do a large portion of the time to try and determine, okay, where are we in the market? Well, you look at the 1-year performance. It's bright green. Okay? You trim that down to 6 months. It's a little less bright green, but it's still green. So it's still good. You trim that down to 3 months. It's a little less bright green. And why is this? Because we're getting into an oversold market. You take that down to 1 month and it's super green. Super green. So for the long term, we're still super green. Midterm, we're still super green. You take it down to short term into the 1 week. We are still a little bit less than green. You take that down to 1 day. Well, it's kind of, we got to go over here. That's the 1 day. So it's a little bit worse, but we're still in a bull market. The charts say it, the colors say, everything says that we are in that. If you want to know what I'm trading, what I'm doing, it's dailystockpick.substack.com. Sign up for it. Right now, you've got, if you go to the link tree, you can get to the newsletter. It's the 5th one right here. The first one is TrendSpider. All the charts we're going to go over today, it's in TrendSpider. You have just a little bit more time left for this 65% off. I think there's 16 minutes. So when you're listening to this, it's going to be 60% off. But it's 60% off. So if you want a TrendSpider, go and get it. Use the link tree. Sign up. Then you email me. And when you email me, I will email you back the 4-hour algorithm. I will email you back the 5-minute algorithm. I will email you the 65-minute algorithm. I will email you everything like that. How do I start my day? Well, one of the things I start my day with is this Seeking Alpha Portfolio Digest. And this is an email that comes out on the daily, comes out to me, gets sent out, and it comes here 3.6 out of 5. This is the core portfolio. This is the Daily Stock Pick core portfolio. If you haven't tracked it on Savvy Trader, go over to Savvy Trader. Look at my portfolio. It's on the link tree as well. You can go and look it. But what I really like is not necessarily this. It tells me that their performers right here, 6%. Eli Lilly was up 2%. Bank of America up 2%. Roblox, which we know we trade at 40. Shopify was down 3%. It's up 3% in pre-market. That's one. PanW was down 3%, but this was down like 11% yesterday. So it was a good thing that it was down 3%. And then you get these breaking news stories, and these are the ones that you want to do. And then you get full analysis. So this email comes out when you sign up for Seeking Alpha Premium. You can get 20% off Seeking Alpha Premium. How do you do it? You go to Linktree. You go over here to Linktree, and it's the second link, and it's 20% off. What do you get? You get in-depth analysis and analysis performance, 24/7 stock coverage, quant ratings. The quant ratings are really good. So go and sign up for that because I will go over a lot of that today. Now let's talk about NVIDIA. NVIDIA earnings won't just impact the stock market. The entire market is watching. What this says, this is just everything that making moves, the S&P, this is going to be it. I mean, NVIDIA is going to move this market. There were reports that Amazon was holding up their orders for the current chips, for the Blackwell chips that will come out later this year. That was denied by Amazon today. So we will see what the order volume is for the current chips because Blackwell is that big of a jump that people may be waiting for the Blackwell stuff. So if that's to happen, any pullback is a buy. NVIDIA's Blackwell will blow things away. Even OpenAI has said that. The power of these new Blackwell chips is going to be monstrous. Now, NVIDIA Q1 downbeat outlook would spread pain beyond AI chip makers. This is about copper in the market, and this is about some of the utilities with the power that go in. If you find that NVIDIA does say downbeat outlook and it would spread pain, I want you to buy utilities. I want you to buy copper. I want you to buy things that power the AI revolution. Because just because NVIDIA is going down doesn't mean AMD isn't going to sell those chips. Doesn't mean that Qualcomm isn't going to sell the chips into the Microsoft computers that they announced. It doesn't mean that AI is done. So what you want to do is you want to take that opportunity on a pullback to buy what's currently strong. And if it's an upward trend, if you're seeing charts kind of like the Qs. So when we look at the Qs, what do we see on a weekly? We see lower left to upper right where we are in a bull market. And you're seeing this. You're going to see another cross up here on the weekly of the MACD. You're seeing the RSI go back to 65. Does it mean that, hey, we've got an opportunity to pull back? Yes. I've said this before, that this period between June of last year and October of last year looks very similar to what we're setting up with now. Look at how that's going up. Look at how this is going up. Are we setting up for a summer pullback that in October, which is a seasonally weak period, we're going to see a huge pullback and another buying opportunity? I don't know that buying opportunity is going to come at the Qs at 455. So if you're dollar cost averaging into the Qs, what you want to do is you want to use my 4-hour algorithm to find places to get in. It matches buy and hold. So you want to find 426. Were you in? If you weren't, you're at 455 now. I have said this before, that the longer we go above 449, which was the previous high, the stronger that becomes support. So if we get a pullback, you may only see it at 449. If you're buying 4 shares of QQQ, because you got, a couple $1,000 and you want to put it into QQQ. That's what, $6 a share? It's $24. So are you going to wait for it to get back to 449 versus 455? No, just buy it. Again, we're in a bull market. That's the point of this. And any opportunity that you can see to buy it, you want to buy it. You want to hedge on NVIDIA? Here's an options play using NVIDIA and SMCI. We talk about it. SMCI will move with NVIDIA. If NVIDIA says that, hey, we've got a huge opportunity in this, you're going to see Dell, you're going to see SMCI, you're going to see all of these other things move along with NVIDIA. You will see Microsoft, you will see Apple, you will see everything move with NVIDIA as long as they have a good outlook. And I don't see why they wouldn't have a good outlook. But you've got a crazy, crazy stock chart in NVIDIA. Let me show you NVIDIA's stock chart. Since we hit those lows back here in April of 744, we've gone straight up. That 744 right there, it was 756 was the actual low. But that 74.44 put in a nice support level that I drew, and I said that was the support that you were going to use to bounce off. Now, where are we? The all-time highs on this one, if we go over to NVIDIA on over here and we go to summary on Seeking Alpha, we can see the 52-week range. The 52-week high was, I think it's 1,050. No, 974. So it hasn't even broken the 1,000 mark. It hasn't broken the 1,000 mark. This might be the catalyst that gets it over 1,000. If you get a chance to buy it under 950 today and you don't have a position in NVIDIA, I think you should take it. Doesn't mean that we might not pull back to this 50-day, which is 875. Doesn't mean that we might not pull back to this volume shelf right here at 912. Just means that I think you should take this opportunity to get into this stock. So, and if you want to play options on this, here's a great options play. I don't know about options. I will talk about, somebody asked me about Lululemon options, and I said I wasn't comfortable commenting on it, but if you want an options play, Seeking Alpha gives you an options play. It'll be in the newsletter. Go and do it. NVIDIA's results come a year after its blowout earnings helped spark the AI frenzy. This is an article just about, hey, this is NVIDIA's currently shares of NVIDIA held in 501 ETFs. Outlined below are 5 ETFs that hold the highest percent. Say you don't want to get into NVIDIA and you just want an ETF. SHOC, 27% NVIDIA. WUIG, 27% NVIDIA. So you have opportunities to get ETFs with exposure to NVIDIA. Not everybody wants to buy single stocks. So if you want to do that, just do that. You can look for these things. In fact, if you want to just, stocks given to you, Alpha Picks. Look at the performance of Alpha Picks, 122% versus 35% on the S&P. It's 2 data-driven stocks. How do you get this great portfolio? You go over to Linktree. It's the third link, Alpha Picks. That's it. So there's your NVIDIA stuff. I don't think that there's anybody telling you that this thing is going to go incredibly down. If we look at the Wall Street ratings on this and we look at the price target is 1,038. That's an 8.9% upside. Well, what is the options market implying? It's implying an 8% move in the stock. So you want to take a look at these things. That's what you want to take a look at. Now let's look at some crazy stock. BuzzFeed surges as Vivek Ramaswamy discloses a 7.7% stake. This is the kind of thing that you want to use TrendSpider and you want to use what's called the A+ setup. And I have an A+ setup strategy set up in here. So if we go to, let's just go to Barnes & Nobles because that was the one yesterday. This one took off and it said, hey, there might be some private stuff. It's still running. Where did the algorithm, the 5-minute algorithm get you in? It was an A+ setup right here. MACD, below the oscillator. RSI, coming off of oversold levels in the 20s. It's at 41. You have confirmation in the candle. The exit hasn't happened. Boy, where are you in this one? Let's see. If you bought this one at 26 cents, you are up 273% in one day. Using this algorithm, again, it's TrendSpider. It takes emotions out of the trades. This is just an A+ setup. I have said this before and I'll say it again. I included this in yesterday's newsletter. Where do you get that A+ setup? Well, it's here in the newsletter. You just go to dailystockpick.substack.com. You can go here and you can import this strategy right into TrendSpider. If you just go to yesterday's newsletter and you scroll down just a little bit, it's right here. Daily Stock Pick A+ setup. That's with FFIE. It was tested. Strategy performance, 43%. So that's just, again, the exit, and I'll say it again, the exit is a little bit tricky. Play with the exit. But this strategy, the entrance on it is really good to trade on a 5-minute candle. And you can look at this. It got you in here, 29 cents. It got you out 3.41%. 29 cents and it got you up to 31. Then it gets you out. It got you back in at 26. So again, TrendSpider is a way to trade that. And that's Barnes & Noble. Let's go to FFIE because FFIE has been running. This has been running like crazy. It got you in at 127. Currently in pre-market, you're at 123. This might be done running. But if we look at the volume perspective during the days when it's opened up with big volume. This might be done, but over the course of the time, it's gotten you into. Now, you may say, well, the algorithm didn't work. It didn't get you out. But look, it got you in at 155. Where did you go here? You went all the way up to $1.92. You could have gotten out when you lost confirmation. You went all the way up to 156, 157. You could have gotten out when you lost confirmation. Again, the exit is the issue. The entrance is not the issue. The entrance is absolutely stellar. So let's look at BZFD. This is BuzzFeed because this one is going nuts today. Where did the algorithm get you in? It got you in at 248. Didn't mean that you didn't go down to 243, but it got you in with an A+ setup. Now, say you weren't watching this, but you heard the news that it was 240. You could have gotten in with any of these confirmations above. Don't know what a confirmation is? Go over here to the newsletter. You can go down to the Education Center. And I've said this before and I'll say it again. I give a free 7-day trial. So if you just want to read these newsletters and not pay me, do it in 7 days. I prefer that you support me with a nice little, 1 month, 1 year, whatever you want. But again, the confirmation of education, you can read it in this bottom one. Confirmation, MACD, button hook algorithm. What do all these terms mean? Plus the indicators I use. It sets you up for all of everything that you see on the screen. Now, would I buy this one right now? Probably not. MACD's going down. RSI down at 55. Algorithm hasn't gotten you out. But again, we talk about just the entrance is the stellar one. Now, if you bought this one, say you bought this one right here, you had confirmation. So 281. In 5 hours, you're up 37%. That's a really good return. So find these opportunities and trade them. What I really like is my 4-hour algorithm. This is not one that you want to trade on the 4-hour algorithm. The reason is this is all hype. And yes, you could have gotten in there at 156. The algorithm outperforms the actual asset. The asset loses 85% over 2 years. The algorithm loses you 39%. It outperforms, it protects you. But when you take a look at a weekly chart, it's upper left to bottom right. You don't want to be in those names. You want to trade those names. Now, let's continue on with anything BuzzFeed. No, PDD. This is the owner of Temu. PDD up 8% in pre-market. It's up 4% right now. They killed it. Profit surges 200%. Transaction services drive revenue growth. I said it before. If you buy Temu, you should be in this one. The quant has it as a strong rating. If we go and we look at this one, just PDD. This is a China stock. China's on the rebound. China stocks have been doing really, really well. PDD is Pinduoduo. It's ranked number 1 out of 29 in the consumer discretionary. It's one of the top ones. Now, its valuation is a D, and I would argue the reason it's a D is because of the high PE. But when you look at Steve Kress's favorite thing, the PEG, which is forward, it's trading 58% against what the sector median is. So it's a good stock. In my mind, I think PDD is a good stock. Let's talk about Target. Target falls after pointing to consumer discretionary softness. I wanted to point out that I do own Target, still at quant, has it as a strong buy. It's down 8%. It's at 141. We can go and take a look at the chart on this one in the 4-hour algorithm. I think it's a $170 stock. I think their announcement yesterday about cutting prices on core of their stuff, this is to drive traffic back into the stores. They made it on revenue, but they missed on earnings per share. We can go over to Earnings Hub. Let's go to Earnings Hub real quick because I'll show you. Earnings Hub is my favorite earnings website. I'm not an affiliate of theirs. I have emailed them. It's from the creators of Savvy Trader. But if we go and we look at Target, you can see they missed on earnings per share, but they beat on revenue. That's not a hard thing to overcome. But when you're lowering prices to try and get customers in, that is going to be hard to overcome. So they're lowering prices. They're hoping that customers trade down. I think it's pretty good. Now, I wanted to point this out too. Remember, I took Target out of the core portfolio. And the reason was it wasn't performing well. So I did this chart. We're looking at Target, we're looking at Costco and Walmart. Costco and Walmart are both in the core portfolio. The reason is because these have lower left to upper right stock charts. They are good companies to buy. They consistently beat earnings. Costco, in fact, is close to $800 now. I bought it at $720 personally just a few weeks ago. It's not too high. They have earnings coming up. Will they announce a membership increase? I said when they announced a membership increase, it was an $800 stock. They didn't even need that to get to an $800 stock. You look over 1 year, they're up 67%. Walmart is up 33%. The XRT, which is the retail sector, which I would kind of put these in, is up 28%. So Target is the only one that's underperforming. There's a reason it's out of the core portfolio. When you go and you look at the year-to-date, Seeking Alpha having a little bit of an issue, but you go to the year-to-date, Walmart and Costco, 20%, 25%, XRT, 4%. You look at Target, it's up 10%. So you're still not down from where Target was, but as you pull in here, Target gets further and further away. When you look at the long term of these things, Target gets further and further away. So you want to make sure that you're in the right territory. That's essentially it. Don't make the mistake of getting into a retailer just because it's down. And you want to look at the 5-year. Target has killed it. Walmart is underperforming for the 5 years. So Walmart probably has some catch up to do. Target may be pulling back. At some point in time, Costco gets pulled back. So we can take a look at that. Lululemon. I got a question about an options play in the Facebook group on Lululemon. I couldn't do the option. I couldn't comment on the options play. I just don't feel comfortable commenting. But it was about Lulu, and the person said, I think it was Charles, said, "Hey, I don't, I have this habit of buying beaten up stocks with options. I'm not going to comment on an options play. What do I think about Lulu? I said there were 3 things. There's 4 things. You got a weak consumer. You got high valuation. You got an analyst revising down. And you have momentum is just horrible in this stock. Continues to lose ground as consumers' taste shifts, competition builds. I have said this before. I bought Lululemon knockoff pants for $30. Comparable pants at Lulu, $120. Do I think that they're the same thing? Exact same thing. Will they last as long? Probably not. But am I paying $120 for pants when I can get the same kind of material for $30? No. And that's the consumer choosing down. Until Lulu can actually get their consumer back in there and get their margins back up, you're going to see this stock continue to fall. It is part of the weak consumer. And higher for longer, whether you like it or not, is going to affect Lululemon. The momentum, it's a killer. It's just not doing well. The growth, B-. They're still growing at a decent thing. But take a look at the valuation. The PEG gap, which is the trailing 12 months, great. 0.32, 44%. But look at the forward. I mean, they just don't have the growth and the momentum to continue to do it. When you look at their, profitability, it's a great margin, 58%, but they're going to have to start selling, putting on sale. So that margin is going to come down. That's going to affect this stock. It is not, again, I don't feel comfortable talking about options, but I just have no hope for this stock whatsoever. When you look at the actual stock chart, we talked about, upper left to bottom right. That's what this is in. So do I think that at some point in time, this earnings gap gets filled? Absolutely. Is it time for that? No. I mean, you're at 306. The support level's 293. So you may still have room to go down. If we look at the weekly, you're just down around, you've passed that 200-day. Every time you've traded below that 200-day, it has provided a nice bounce. I would say this time's different. This time's just different. That's what I would say about Lulu. Google plans to bring ads in search to AI overview. Google's going to be one of the first ones to monetize this. They're gonna monetize AI. Whether you like the company or not, they're gonna monetize AI. It's a good one to do. Now, AI market. Microsoft's latest tools turn anyone into a software developer. Microsoft is at an all-time high. All-time high. So what do you do with Microsoft at an all-time high? Me personally, when I start to see weakness, I will sell. I do not think that the all-time high in this one right now is a time to sell. You've got too much hype on AI. You've got too much spend on AI, and you've got too much momentum in your favor. So I would say when you get above that 440 mark again, I would say you look to start to trim a little bit. If you need, solace, sell 1 share. If you got 100 shares, sell 1 share. If you've got like 3-4 shares of this stock, just hold on to it. I would not trim it. I would say, hey, you really want to just hold on to this one. Now, we talked about Microsoft and Google. AllianceBernstein spotlights Microsoft and Google as quality AI picks going into the next second half of the year. These are stocks that you want to hold for the next 5 to 10 years. They are monetizing AI. We're in an AI and a GLP-1 market. So both of those are good. Now, social requests. Nick asked me about GCT. He said, hey, Kramer talked about GCT. What do you think? Here's the Kramer. I'll link this in the core in the newsletter. There's something off about Gig Cloud story with Jim Kramer. So Jim Kramer basically said, hey, GCT, there's something off about it. I would tend to agree. I mean, you look at this stock, and it's just, again, we talked about upper left to lower right. Hold on 1 second. Hey, stop. So upper left to lower right, she's got her own bed. Dog's crying because she wants me to put the blanket over her head. She can get the blanket over her head. Algorithm has you out. Algorithm outperforms on this one. And I should have listened to the algorithm, because now we're down, I bought this at 40. We're down at 27. Kramer brings up a couple of things. The short, the short report that was out there on GCT, AlphaPix covered this in their, this is an AlphaPix stock, and it's still rated strong on the quant. It shouldn't be a main portion of your portfolio. I do have a significant position in it that I'm down. I probably will buy a little bit more once it kind of flattens out. It's down 15% today. And there's not a hell of a lot of news on this one. Grizzly short report. This is another one. GigaCloud dropped 13% after a Grizzly short report on the Chinese e-commerce company. Didn't respond immediately, Seeking Alpha email for comment. Now, Seeking Alpha analysts, the group, the AlphaPix guys, they've gone to the warehouses. They've talked to the CEO. I don't know why they wouldn't respond to it. But it is down again. Has my outlook changed? Probably not. I mean, here's the thing. Jim Cramer repeated the short seller report. There's a new one today. That's why it's down. Jim reiterated what he saw on Seeking Alpha Premium, that only 2 analysts cover it. I've gone over this. There's only 2 analysts that cover this on Seeking Alpha or on Wall Street. And according to them, it's very cheap. But as they come out with more short reports, you've got to say something's up with this. And that's what Jim's saying. Do we want to, if you believe Jim Cramer, you are going to stay out of this one, or you're going to get out. If you think inverse is true, let's just quote Elon. Let's tell Jim, hey, it's no Bear Stearns. I mean, again, I don't know enough about this company to say, yes, I am counting on the quant team over at Seeking Alpha, the AlphaPix group, who has picked it, who has done a phenomenal job. Again, if you want to see the AlphaPix portfolio, then, look at it, 122%. You don't go all in on a stock. And that was a mistake that I did was, hey, I really like this stock. It's lower left to upper right. I went all in. Didn't think that there were going to be more short reports. Didn't think there were problems. But all of that was outlined in the AlphaPix report. Everything that you're hearing about the stock was outlined in the AlphaPix report. I made a mistake. I thought it was going to continue to go higher. It didn't. I've got to reevaluate. Probably going to get out of this one. Maybe wait for it to settle down. Because when you look at the weekly of this has gone hyperbolic. I mean, you may get back to below 20. You may go back to the 50-day on this one. It's just gone hyperbolic. It was a crazy IPO. It was a crazy, crazy IPO that went all the way up to, let's see, $60. $60. Here you saw this one funnel up. It went to 18 before it dropped down to 10. So you've got some super volatility in this name. Now, from a weekly standpoint, look at how high that MACD is. Look at the RSI. So I would say I probably got over my skis on this one. May take the loss, just kind of chalk it up. May put my money somewhere else. Wait for this one to settle down a little bit and pull back a little bit. Scott asked me about VRT. Small investment. Just wanted to see what you think. VRT, this may be the reason you bought it. The real AI stock darling since boom isn't NVIDIA. It's Bank of America says it's VRT. VRT is let's see, I quoted this article. NVIDIA has been thrust in at the center stage of the AI investment, but shares of VRT, a data center equipment manufacturer, have outstripped the chip maker's blockbuster stock performance over the last year. Bank of America highlights Vertiv's roughly 300% outperformance of NVIDIA. Since the graphics processor maker units released its blowout Q of last year. So let's take a look at Vertiv. If we just click on VRT and we go, and what I really want to do, I mean, obviously it's a strong buy. A lot of this stuff is a strong buy. You're at an all-time, if not 52-week high. 104 is the 52-week high. But again, you look at this and it's an AI darling. I don't know if it's an alpha pick. I don't know if it's in that portfolio. Quant has it as a hold, and the only reason is the valuation. But what I want to do is chart this against NVIDIA. So I'll select the symbol. Again, if you don't have Seeking Alpha Premium, you can do a lot of this stuff without Seeking Alpha Premium. Just use my link. And if you decide to get Premium, then, I get paid within 30 days or something. But when you look at 1 year, 500% against NVIDIA, 205%. When you look at year to date, VRT is outperforming NVIDIA. 6 month, VRT is outperforming NVIDIA. 1 month, VRT is outperforming NVIDIA. 5 days, VRT is outperforming NVIDIA. So you look at 5 years, and NVIDIA is blowing it away. But is VRT going to catch up to NVIDIA? That might be the thing. Again, you look at this and the valuation is what's really kind of coming out and saying, hey, it's not great. But you look at the gap, the forward gap, and it's trading 59% below its industry sector median. Now it's 11 out of 68. This is electric components and equipment stocks. What's above there? You can see Powell. Powell is above, right below it. Powell is an alpha pick. I know that one. Let's see. I don't know these other ones, but you may want to take a look at these other ones. The valuation of CBAT. CBAT, I know nothing about this. I just clicked on it. Profitability is a C-. Why? Well, they only have a 21% gross profit margin. Sector median's 31%. Maybe they have some pricing power that they could take. So CBAT might be an interesting one. Let's talk about scans. Some of the scans, MPLX, this is a core portfolio. The reason this one is a core portfolio, it puts off a 9%, roughly 9% dividend, between 8 and 9%. You got to buy here at $40.95. When it was up here at 42, I said, hey, you got to double top. It looks like it's pulling off. You may want to wait for it to buy to get down there around $40, $40.95. Again, this is a long-term buy and hold. You want to know why it's a long-term buy and hold? Lower left to upper right with a 9.34% forward dividend. That's it. We talked about POWL. This is in my personal watch list that you get when you sign up for TrendSpider. So you get the daily stock pick watch list. This is one that scanned and it came in 127. And this one just got another bullish signal to go up at 184. Boy, look at that algorithm perform. For 127, you're up in 34 days, 43%, and you're double topping it again at 193. Do you want to buy here? I would say you wait to hold to see if this one gets over these highs. And the highs are, looks like 197. So do you want to, if that's your ceiling, then you probably want to just wait. If we just put this horizontal line here and we put it at 197.87 right there, and you put, that's your top. So you don't have much room to get to the top again. If this is going to go over that, you want to wait for that, because the upside is not that great, but it does get another leg up. Now we talked about Duolingo. This is on the watch list as well. This is at 180.94. Now you're trading at 180.84. I would say I would not get into this one other than a trade. If you like this and you think that it's going to come up, I would trade it. Because again, any reaction in the market is an overreaction. But I don't like their business model. And when we go and we look at DUOL, this is Duolingo. This is a language model. If you've watched any of the AI stuff, they have real-time translation. So real-time translation may hurt this stock. Again, if Apple comes out with something on their phone, then this could be the opportunity that who's going to learn a language when you can have a real-time conversation with somebody through AI. So Duolingo, I would trade it. I wouldn't necessarily own it. Chewy, Nike, Copart, leveraged ETFs, DRV. DRV is the real estate sector. This is the real estate sector bear. So we had Toll Brothers last night reported good earnings. You got the bear. Is the bear going to kick back up here to 45? Might. I mean, again, this is a 3 times levered daily ETF. So, the MACD's down below. Looks like an A+ setup to me. Are we going to go into a bear market in the real estate market? Maybe. I mean, rates higher for longer. You can see it's putting in this nice trading range right here between 36 and probably 65. Do we get back up there? Do rates, suddenly does June come and we don't get the rate cut? We won't get a raise on it. SDOW, this is the short of the Dow. The Dow has been struggling to make gains versus the NASDAQ and the S&P. The Dow has been struggling. SDOW, this is a ultra pro short triple levered against the Dow. Are you going to buy this one at 1588? I mean, the RSI certainly looks like it's about to come up. These are all decaying assets, by the way. So do not think these are investments. These are all decaying assets. You don't want to buy these and say, oh my God, these are going to continue to go up. No, these will not continue to go up. So take a look at the newsletter if you want to see more of them. If you just go to dailystockpick.substack.com, we'll go over here and we'll look at it. It is free during the week. Completely 100% free. You get all the scans. You get all of the news articles that I post. I do post, everything that I go over. You get, if you don't want to listen to me for an hour, 40 minutes, just go over here. And you can listen to it while you read, or you can pick and choose which articles you want to do. I sometimes throw a little bit extra in there. But if you want, the one thing that I would say is you go down to the end and you go to the scans. Because the scans are bullish in my 4-hour algorithm. And I kind of tell you, hey, this is one that I like. This is one that I don't like. So those are the ones that you want to trade. Again, this is just a suggestion for you. And if you want the education, sign up for it. Again, it's a free one for 7 days. Now, to support the podcast, you can do a bunch of things. You can buy TrendSpider. You can buy Seeking Alpha Premium, Alpha Picks. You can join Webull and get 75 free stocks. You can just join my newsletter. Go and join the newsletter. You can get Visible service, Visible phone service. This is you save $20 off your first month. Well, what's your first month? It's $25. So if you're paying anything more than $25 a month for your phone service, you're crazy. This is the service that I have for $25 that you're seeing on the screen. Now, I don't go up to the $45. If you want better service, it's $45. I don't particularly need the better service. I do a lot of hotspot work using my mobile phone, unlimited hotspot. You get unlimited data, talk, and text. It's on the Verizon network. The Verizon network, I know you got those Verizon plans where you're paying $80, $90, $110 for your service. Why wouldn't you get the same plan for $25 or $45? It's the same plan for $45. Now, if you're at your house and you like, hey, I watch Gary all the time, and he's got AT&T Fiber. I do have AT&T Fiber. Use my link on Linktree. Right down here, AT&T, refer a friend. Fiber and wireless referral program. Go and get it. See if you're available for AT&T Fiber. You can see if you activate the AT&T wireless. But the wireless service, I personally get Visible. I don't get AT&T. I mean, my parents had AT&T. They didn't like it. It was a little bit. I love my AT&T Fiber. AT&T 1 gig service. It is unbelievably fast. I've never had a problem with buffering. Never had a problem with any kind of speed. It is better than cable. So as a former cable executive who launched high-speed data service in California, I will tell you the difference between the phone company and the cable company. The cable company, it is a shared line. Now, don't let that scare you, because typically they have very good lines. If you are talking with a friend and they ever say, oh, I can't see you, that is your upload. The reason is because cable doesn't have a symmetrical speed. They limit the upload versus the download. Download, they load up on. When they say it's 500 megabits or it's 1 gig speed, they're loading up on that download because the majority of people use the download. Me, I need the upload because I upload all of these videos. I do all of this creator stuff. So I need both. So I get 1 gig symmetrical, $70 a month. I don't think that's too bad at all, personally. My Charter, if I were to get Charter at my house, I think it's $40 a month, but I can't deal with the slow upload. I think it's down to about 12 megabits per second. I get 1 gig. 1 gig. That's 1,000 megabits per second. So again, I can't tell you enough about good stuff about AT&T, Webull, Alpha Picks, Seeking Alpha. If you just want to pay me, say you made some money off of some stuff, and you just want to give me a nice little gift, Venmo, PayPal, Cash App, it's all there. It's all there. If you want to join any of our social stuff, it's up there. I will talk to you tomorrow. I may be live with the paid newsletter subscribers on Zoom. That's one of the benefits that you get. So if you sign up, maybe I'm live today with the earnings. Okay, take care. Talk to you later. Bye. Okay. Envy, I told you about GCT, so hopefully you heard that one. Yeah, GCT, and I don't like the new short report. I didn't read the new short report, but the fact that there is a new short report, I mean, let's look at the 5-minute. Let's see. Did it get a 5-minute setup here for a buy? Nope. It probably will get you in a buy at 28 here. Again, any reaction in the market is an overreaction. And you can see when that short report came out, it went from 30 down to 27. Yeah, 27.15. Looks like it was the low. I think you're going to put in kind of a shelf there. You were putting in a shelf at 33, but now you're putting in a shelf at 28. I just think from a weekly perspective, I think it got oversold. This is a 23% candle on the weekly. And the MACD is still high up there. The oscillator, well below it. You're at 5 on the oscillator. I mean, you shouldn't be above anything 2. So I think I got a little bit over my skis on that one. Woof is an interesting one. I won't argue that it's not a horrible one. I mean, you can see it's popping today. This 5-minute one got you in here at 254. Boy, that was a great buy. The 4-hour, I do have Chewy on my watch list. I don't have Woof. And the reason is, if I go over here and I look at Chewy, both are bad. I wouldn't own either one. But I do think that one, if we go peers, let me see, is Woof on this? No, we're going to edit. I don't know why Five Below and Signet Jewelers are. We're going to go Woof. One thing that Woof has that Chewy doesn't is the brick and mortar. But you can see the market cap significantly higher for Chewy. Lower employees, Seeking Alpha analysts covering 7, Wall Street analysts 29 versus 15. Both have just been horrible, just horrible. You can see the year to date. Wolf is back to 0% year to date. Chewy is still down 27%. Quant rating on Wolf says strong sale. Let's see. It's been a strong sell. The valuation's not horrible. I mean, they don't release a lot. They're not making money, but it doesn't look horrible. The momentum's just bad, but it's a good trade. I mean, if you can find an algorithm that kind of works on it. Let's see this trading. Oh, let's refresh. I think my ad blocker sometimes messes with some of this stuff. Where's the trading? There we go. So 52-week high, 40.78. God, $40.78, and it's trading at $16.70. Price versus 52-week high. Wolf is actually down 74% from his 52-week high, 73%. So it's right in the middle. Chewy is still kind of on the upbound. So 3-month return, you can see. 1-month return. Wolf is killing it. Killing it. But I don't know. Is Wolf one of the meme stocks? XRT. That is the retail, I think, isn't it? Yeah, S&P retail. Let's see the holdings. 2% of that's GameStop. I mean, that's our largest holding is GameStop. I mean, I'm not a huge XRT fan, just because retail has not done well. You can see 10-year, it's half. 5-year, it's kind of keeping up. 3-year, retail just hasn't done well. 1 year, it's kind of even. Year to date, it's underperforming. 6 month, it's kind of beating, but it's pretty much even. 1 month, pretty much even. I'm not a huge fan, but XRT from a standpoint of this 4-hour algorithm makes you 25% against 22%. It's upper left, lower right short term. When you look at the weekly, it's just kind of trading on its 200-day. So I don't think it's a horrible one, but I'm not a huge fan of it. And that the GameStop one, and remember, GameStop was the biggest one, but it's only 2%. It's not a huge one. Oh, morning, Brandon. I am just getting out of here. It's 10 o'clock. I only did about a half hour. It was all about NVIDIA. Eli Lilly's about to cross 800. Costco is above 800. I think the bad Target earnings bode well for Costco. I mean, I'm going to sell Costco at some point in time. I said that before. It just hasn't shown any weakness to sell. And their earnings are coming up next week, May 30th. So, okay, I am out of here. Dog was crying, so I got to go check on her a little bit. But I'll put out the newsletter. If you have any questions, hit me up.